So how did my portfolio go from $350 to $33,000 in just 18 months? Well, I put in a lot of money. That's pretty much a majority of it. But we're going to get into the nitty-gritty of how I did it in this video. So just to prove that I'm not making any of this up, so we're at the homepage of M1 Finance. You're looking at the portfolio right now, just the homepage. And if we scroll to the bottom here, you can see $347.83 on February 21st, 2018. So the initial deposit of $350 went down just a touch after I deposited. And we go to today's date. I'm recording this on a Sunday, but not a big deal. $33,264.80. And this is just over 18 months of time. So I said in the beginning of the video, well, it's pretty much me putting in a lot of money into the portfolio. So let's get a clear description of that. So we go to the holdings tab in M1 Finance and we go at the bottom here. This $33,122.48 represents our cost basis as pretty much how much went into the portfolio. So if you're talking from a total appreciation return, you can see that on the right here, $142.32 or 0.43%, not including any dividends reinvested or money weighted average, just up $142 on just appreciation. So in this portfolio, there is a total of $33,122. That is the cost basis. And you're looking at the total, $33,264. So pretty much the answer is, well, he just put 33 grand into his portfolio and that's how he grew it, correct? Sorta. We're sorta getting there. What's interesting now about the new M1 Finance update is that we can go to this funding history tab and it shows how much I put from my own bank account into the portfolio. And of course, it is quite a lot. So 2018, we have $15,113.89. And this year so far, 2019 year to date, $13,917.48. This totals to an amount of $29,031.37 that I've deposited from my bank account into the M1 Finance portfolio. So you might be saying, okay, you just put a lot of money in. Is that really good investing? Is your portfolio really bad and you just keep feeding it and that's how it keeps growing? Well, let's get into that. So recall that my cost basis of the portfolio was $33,122 and my funding was $29,031.37 from my bank account. So what is making up that $4,091 difference? Well, we click the gain here. It shows a breakdown of earned dividends of $1,215. Now, earned dividends in M1 Finance doesn't necessarily mean that's how much you've been paid out already. That just means that you've held the holdings through their ex-dividend date and you are eligible to receive that dividend payment. So earned doesn't mean that you've gotten it already, but I've gotten most of this already and I've calculated at $1,150 that I've received in dividend payments from companies in this portfolio. That leaves a remainder of $2,941. And of the rest of this, I project that about 1,900 of it is from referrals. Look, I use M1 Finance. It's the only brokerage that I use. So I'm very adamant about it. I love M1 Finance. I recommend it to any new investors out there. And, you know, because of that, it's the only portfolio on my channel. It's what I recommend. So users sign up using the link and they like it. So I'm glad everyone is using my link. Thank you so much. If you're one of the people that has used my link, you have no idea how grateful I am for that. You're helping the portfolio out immensely. That being said, when you calculate that out, you're left with $1,000 difference between the cost basis and what's funded from my account. And honestly, I have no clue what it is. I don't know if the funding history is not up to date. Maybe that $29,000 that I stated earlier that I put into the portfolio is not calculating. I don't know, maybe M1 Finance cuts off some of the recent payments in that funding history. Whatever the case may be, I don't know what that 1,000 is, but we're just going to assume, let's just say it's referral income, even though it's not. So about 2,900 would be from referral income. The rest is coming from earned dividends, and that makes the gap up between my cost basis of the portfolio and what I use to fund the portfolio from my own bank account. But let's talk about the $29,000 that I use to fund my own bank account with. So right now we are looking at a platform called Amazon Mechanical Turk, and I know I have my big ass head in the middle of most of the screen, but that's okay because that's not the most important part. Amazon Mechanical Turk is simply this website you can go on, sponsored through Amazon, where all these requesters can put out these little micro tasks or micro jobs, as they're called, that require some kind of human knowledge to take care of. It can't all be done by a robot. And that's why their tasks are called HITs, which just stands for Human Intelligence Task. But it could be anywhere from surveys, it could be these little transcription jobs. These are little micro jobs, stuff that's like, oh, take the number of this VIN off this car, type it in a box, and you'll get a penny. It's stuff like that. It's a lot of grind work, trust me. It is a lot of grind work. You got to be, even though it requires human intelligence, you got to be a bit of a robot yourself to be able to do these and keep your sanity. So I've been doing it for a couple years now. And as you can see in the bottom right corner of the screen here, you're looking at total earnings, $3,025.16. I have put every single penny that I have earned from Mechanical Turk into my M1 Finance portfolio. So of the $29,000 that I have from my bank account coming into M1 Finance, $3,000 of which is from Amazon Mechanical Turk. So let me explain how I do this. So on Amazon Mechanical Turk, you see available for transfer in the upper right here, 97 cents. If that's above $1, I can put that into my bank account for the day. So I try my best to do Mechanical Turk every single day. And if it gets above $1, I put that dollar into M1 Finance. Now, M1 Finance doesn't let you invest unless your cash balance is above $10. So what do we do there? Let's get into it. So I have $1 from Amazon Mechanical Turk from the night before. Say, I can't put that dollar right in M1 Finance. You need $10 for it to trade. So we're looking at the funding history, and you might be asking, well, then what do you do? So if you're new to the channel, new to the portfolio, I invest $30 minimum every single trading day, no matter what. So what do? So I take that $30, and let's say I earned $1 from Amazon Mechanical Turk the night before, and that next day's deposit will be $31. So I take the $30 base, and that will never change. Maybe it'll even grow in the future. And then I take whatever I earn from Mechanical Turk, combine it, and it goes into the funding. So there are 252 trading days in 2019. With $30 minimum going every single trading day. This results in a minimum for 2019 of $7,560 going into the portfolio. Now you're looking at the history right here of the funding. I'm already well above that. I'm almost double it. I'm already at $13,900 coming out of my bank, when if I did the traditional $30 every single trading day, I would only be at $7,560 for the entire year. So I'm going ultra aggressive with this funding. So how do I do it? Let's get into that. Guys and gals, I am pretty much debt free. And I say pretty much because the house that I'm living in is my wife's. But even though it's not technically under my name, I consider it debt because I pay more than half of the mortgage payment each month. I pay half the mortgage payment, I pay the internet, and then I pay my own cell phone and my insurance and all that stuff. And then my wife pays everything else for the house, utilities, and all that other stuff. So my burn rate is extremely low. Because of this, I save a minimum every month of 45% of my income from my actual day job as a financial analyst. I save my ass off, to put it lightly, because let's be real, $29,000 coming from my bank account. You subtract out $3,000 from Mechanical Turk, $26,000 is a large sum of money. And that's pretty much how my portfolio has grown from $350 to $33,000. I save my ass off. 45% minimum of my paychecks each month either go into my emergency fund or my 401k or into this portfolio right here. So I'm not sugarcoating it. $26,000 is a lot of money in 18 months to just come directly from the bank account. Let's dive into that a little bit further. So of that $26,000, $5,000 of which was a big one-time gambling win. I am a degenerate gambler. You take out $5,000, we are left with $21,000 coming out of the bank account. What else did we have that was also one time? Oh, we had another $2,000 big gambling win. This takes the total down to $19,000 coming out of my bank account. But still, that is a huge chunk of money. Oh, wait, we have credit card cash back. And this came out to about, I've only started using credit cards recently. This came out to about $125. We're at like $18,000. Let's just make it nice and easy and say $18,800 to make it nice round numbers. Oh wait, YouTube income probably around $1,400. I could pull this number directly. I don't know why I'm not, but we'll just say $1,400 that I've earned from inception of since I've been getting paid from YouTube. $1,400, so we were at $18,800, then $17,400 came from my bank account. There's more. We got 2 work bonuses since I started this. One from my old employer, one from my current employer. After taxes, I put pretty much the entire thing, not all of it, but most of both of those bonus payments into this portfolio. That was around $2,000. We were down to $15,400 coming from my bank account directly. 2 more one-time events, tax refunds. This year I got about $600. Last year I got about $1,200. All of that went right into this portfolio. $1,800. I've already lost count of where I was. What was I? $15,400. So we are at $13,600 actually coming from my bank account. There's a little, one-off nuances that also come. I have my cashback rewards app, so this is bumped in terms of getting stock back when I do certain purchases, but I haven't cashed that out yet. I have yet to cash out the P app or Pi app. It's spelled PEI, but I'm like 10 cents away from putting my $15 into there. There's also been little one-offs, like if I was making little sports bets that have paid off, some horse racing bets that have paid off. All in all, I've probably paid off from my own bank account, from my actual day job and not these one-off events, $12,000 of the $29,000 that I funded in the portfolio. Guys, that is how I grew my portfolio from $350 to $33,000. This leads me into a very interesting point that I want to talk about. Let's get into it. Saving money and aggressively funding your portfolio is the key to success. Consistent funding. Now, we can talk about dollar cost average versus lump sum investing. And I also did a video on lump sum investing is kind of superior, at least on a research paper done by Vanguard. Leave a link in the video description below to that video if you're interested, where it pretty much said that lump sum beat out dollar cost averaging in 66% of trials through 3 different global markets. So you can click the link in the description if you're interested in seeing that video. It's a very quick video, but nonetheless, I do dollar cost averaging because look, even though we boiled it down to I only spent $12,000 from my actual bank account from my day job into this portfolio, I don't have $12,000 in my bank account. I'm not even close, if I'm being brutally honest. I almost consider this portfolio like a never-ending debt that you will never pay off, but you need to continue paying off. So I consider the $30 a day like a minimum debt payment that I have to make to this entity that is my portfolio. That is the mentality you should have. You should treat it as important as other debt. If you have other debts, try and get debt free. That's a huge key point to do. But you have to make the portfolio a priority in your life. And it doesn't matter what kind of portfolio that you create, as long as it's not, completely asinine, where you have all these crazy holdings that are just 100% risky, or you're well under diversified. If you have an average portfolio, you're going to do just fine as long as you keep consistently funding it. My portfolio is way different than a lot of other portfolios out there. It's not just an index fund. It's not these blue chip holdings. It's some kind of weird combination of index funds and high yielders. Just to scroll down, but to give you some perspective, it doesn't matter ultimately, again, considering your portfolio is not these extremes, it doesn't matter how you design it. As long as you keep consistently funding it, you're going to see success in the stock market. The whole point of betting on the stock market is you're essentially betting that the US economy over the long run is going to go up, right? The US economy is going to thrive and prosper. Capitalism in the United States is going to thrive. And that's pretty much what you're betting on. As long as you have that mindset that you're going to believe in the American economy for future generations, then you should have no issue funding your own portfolio as much as you would a car or a house or student loans or any of these things. It should be a high priority in your life. I've made it a high priority in my life, and that's what you have to do in order for it to grow. $350 to 33K. Look, that's impressive, even though it's just like adding money into the portfolio. I'm not really seeing much results in terms of portfolio appreciation. In fact, if we go to this gain right here, you can see $539. That's not a lot of gains. Again, I'm recording this after we had a 2.5% drop on Friday, but at the same time, I can care less about gains. This one's for cash flow. But what I'm getting at here is that it is so important to keep funding your portfolio. Look, even if this had 0% appreciation and 0% earned dividends, well, I'd still have $33,000, right? Because that's my cost basis. I'd still have $33,000 at the end of the day, and I'm not going to complain about that because it's my money, and this is an individual taxable. I can take it out whenever I want. I can do whatever the hell I want with it. That's what I'm trying to drive home here. That is how I grew my portfolio so rapidly. You have to fund it. You have to make it a priority in your life. Look, if you're not into researching stocks and all that, that's fine. Just go into indexes, but you still have to fund it. But you could just put your $30 if you want to do that like I do. Just fund it and then let it go. And you never have to worry about it again, like until you want to take some money out. I hope you enjoyed this video. I hope it was very informative. Hope it was a little bit eye-opening to some of you. So a lot of people just assume that, I get a lot of gains or I get a lot of dividends. And the truth is I just pour a lot of money into the portfolio. And even though from the bank account, it shows that I'm pouring out $29K. It's really only $12,000 to $13,000 of honest day job, non-one-time event money. So it's definitely doable in my opinion if you have a formidable job, a decent paying job. Look, I'm not paid very high. I'm not even close to 100K or anything like that. Okay, I'm not very close at all, to be honest. But if you make it a priority, you can make these kind of portfolio moves. And look, this is a cash flow oriented, income oriented, dividend oriented pie. So as this amount gets bigger, I'm only going to get more and more higher dividend payments. And the snowball is just going to get rolling down that avalanche, really start compounding. And that's when things are going to get really exciting. Guys and girls, I understand how difficult that first movement is from going from that like $300 to $5,000 to $10,000 to $15,000. I know how hard it is, especially if you're in the dividend portfolios. It can be very slow. It can be very grindy. But you know what? When you look back at it like I am right now, it's only been 18 months. And the fact that I've put in over 30K from, referral earnings, dividend income, my bank account, whatever it is. The fact that I've done that in only 18 months is remarkable. It's only going to grow from here, and I cannot wait to see the future. But I hope this video gave some inspiration, some knowledge into how really big portfolios get it. It's from their consistent funding. So, hope you enjoyed this video. See you guys and gals in the next one.